Okay, so we're back with payroll. So for companies that have employees, obviously payroll is a very important current liability. All right. So over the next couple of slides, we're going to talk about the foundational issues relating to accounting for payroll transactions, and then we'll shift into a problem to see it in application. All right. So if you've ever had a job, and I assume most of you have because that's our campus. I mean, most of our students work or have worked. You know that your gross pay is, say you make $10 an hour. All right. So, and in a week you work 20 hours. Well, your gross pay is $10 an hour times 20 hours, right? And if you've worked, you also know that your check is not going to reflect that amount because you'll have deductions. All right. Now, they may vary from what we see below, but they're going to include some of the things that we see below. Federal income tax, there's a good chance that that comes out as a deduction. State and local, we have California here, but relevant for us is Ohio, and if you work within the city limits, also Cincinnati city tax. All right. Voluntary deductions. So if you're full-time, these are things like your health care, union dues, if you do United Way, so any charitable giving that you've opted into, those come out. And then, of course, FICA, which is an acronym. FICA is it stands for Federal Insurance Contributions Act. And there are two pieces to FICA. The first is Social Security, which is a system set up to provide for retirement income, all right, and then Medicare, which is a system set up to provide for health care in your retirement. After all those deductions come out, your check actually is the net pay. All right. And so we're going to do the accounting behind that. In addition to taxes that the employee pays, i.e. you if you have a job, the employer, the company you work for, also pays taxes, right? So the thing to know about FICA, Social Security, and Medicare is that they're matching taxes, which means the employer pays the exact same amount that comes out of your check. All right. For Social Security, it amounts to 6.25%, and FICA is 1.45%. All right. And so your employer matches those amounts. All right. So if you feel like FICA's a lot that comes out of your check, the tax is actually double the amount that you see. All right. The other thing that employers pay are unemployment taxes, and these are levied. They're administered at the state level, but there is a federal unemployment tax that basically funds the state unemployment agencies. So there's federal and state unemployment taxes, and all of these costs are borne by the employer. Right? So basically the employer is taxed on the wages that they pay employees. And we'll do the accounting for that momentarily. Okay. This is the general breakdown of federal unemployment, which we'll refer to as FUTA, Federal Unemployment Tax Act. 6% on the first $7,000 of wages paid to each employee, right? And that's the tax. But the reality is that some employers lay employees off regularly and other employers don't. So for employers who don't commonly lay off employees, they may be eligible to take a credit, i.e. a reduction of this 6% up to 5.4%. So basically, depending upon track record of layoff and former employees who have used the unemployment system, employers pay somewhere between 6 and 0.6% for their federal unemployment tax. All right. State employment is 5.4% on the first $7,000 of each employee's salary. Okay, we'll look at the accounting for this.